Let's just take a look at the picture that we saw in the market last week. The NSE 20 managing to post somewhat of a gain, a tenth of a percent to the good. Foreigners emerging as net buyers. But when we look at volumes and value traded, that down substantially. What are you reading into the market at this point?
Basically, there's a bit of cautious playing in the market, a cautious approach. We're actually seeing some of the stocks actually dip quite more than what they did. We're seeing all-time lows. Example, KCB down to levels of 1490. A bit of demand coming in for counters like Equity, Corp Bank. So we are seeing a bit of cautious playing in the market. That's actually we're actually seeing a slight dip in volume as we go on.
Although we had Equity Bank and Barclays Bank posting gains for the week, overall the banking sector slipped back down 2% week on week. If we're looking at interbank rates and what they're telling us at this point in time, they've shot up to 14.5%. That's an increase of 680 basis points last week. Are we likely to see an imminent rise in lending rates to consumers anytime soon?
Definitely, with the plans coming in by central bank, one of them is actually increasing the interbank rate, therefore actually mopping up the excess liquidity in the market. We're also seeing actually rates for T-bills and also the bond rates actually picking up. Therefore, actually we're actually seeing banks actually shift their play from actually lending out to actually playing in government borrowing. So definitely we may see a slight push-up price in terms of interest rates.
Now, interest rates, of course, are going to have an impact on the value of bonds in banks' portfolios. Also, of course, loan book growth and asset quality. You've also got costs rising with staff wages increasing over the next 2 years. That was agreed last week. With all these pressure factors that banks are facing, which of the banks do you feel are most well positioned to cushion themselves against these headwinds?
I think one of the major banks we'll see are the banks actually maintaining their level of interest, and also the banks that actually have cut down on their staff costs. We saw KCB trying to do that by like shortening its high management employee cost, and then we saw also Barclays actually trying to reduce some of the costs. So therefore, these are banks that we may see actually benefiting from this, and also we actually seen them actually playing a huge role in terms of forex. We're actually seeing them making huge gains, particularly in this financial year from forex trading. So definitely we may see some of the banks actually taking a hit in terms of cost and in terms of interest, in terms of their books. But all in all, we may actually see them making good money in terms of forex trading.
Forex trading, yes, for the beginning part of 2011, but going forward with the rules changing now in terms of how they're allowed to trade forex and also how much forex they're allowed to hold on their books at any one time, that's likely to change going forward, isn't it?
Definitely. With them reducing their holding by half, definitely that will actually change in terms of earnings that are going to come in, particularly from forex trading. So we're actually seeing most of the banks actually rolling over their books. We're actually seeing them going in long term in terms of bond holding than the usual trading, day-to-day trading of bond books. We're actually seeing them going in for the whole long haul. So therefore, we may actually see them actually try and mitigate that loss or that risk coming in terms of bond losses that they may actually incur.
Let's shift focus to the insurance sector. UAP Insurance planning an IPO to raise $39 to $49 million. Does the market have appetite for a stock like UAP?
But definitely, in terms of performance in insurance sector compared to its peers in the market, they're actually doing quite well. But yet again, it's not yet confirmed if they're actually going to do an IPO or do a private placement. But it's not yet confirmed yet, considering the sentiments in the market and where the market is moving. The previous IPOs we had Britac, and we also had a listing for introduction of TransCentury. Those stocks have actually not performed as much as
losing
it was anticipated in terms of
those stocks have lost a third of their value since listing. So the case for going to the market is very questionable at this point in time.
Definitely. If I were them actually set out instead of doing an IPO at the moment, I'll actually look at other ways of raising this particular capital. Because if you're looking at in terms of even in terms of subscription of Britac was undersubscribed, and most of the people went in were highly retail. We have very few foreign players, very few institutional players coming in. So for me, I'll actually, if I were them, I'll actually look at other ways of raising income, or looking at if you're looking at an IPO or introduction to the market, market. Look at it maybe in 2013. I think that should be a good time for them to actually come in.
Whilst we're looking at the insurance sector, just news emerging that medical aid premiums are rising between 10 to 20%. Of course, inflation really hitting their profit margins. How would you be playing the insurance sector at this point in time? Would you be putting your money into it, given the fact that premiums are rising and this could impact provisions going forward?
We actually took that into play. We're actually seeing this year. We will not see much in terms of positive results or improved results in terms of revenues coming in from insurance funds. Definitely, inflation is actually taking a huge chunk of how much Kenyans are left with to save, and most of these premiums, these covers, are actually saving plans that people are coming in to actually take out from insurance funds. So therefore, we actually see. I'll play a cautious approach when approaching investment in insurance companies.
Are any of the listed insurance companies taking an innovative approach to keeping insurers or keeping customers on their books?
We actually saw Jubilee coming up with new products, expanding globally into the other markets. We actually seen them in Tanzania, looking at going into Rwanda and other markets. Definitely, that is one way of actually looking at keeping your revenues growing, keeping customer growth growing. Definitely, that's one way of looking at it. BRITAC had the same idea when they did the IPO. Major reason was expansion into other markets and expansion into other lines of revenue. Definitely, those are ways that they're actually looking at increasing their customer numbers and increasing their revenues.
Amos, a quick comment on Kenya Airways finally getting the green light from shareholders to raise those extra funds from the market. Do you see us getting any positive sentiment around that stock this week?
Definitely, we may see some interest coming in on it. Most of the investors have actually been waiting to hear from the company. Are we going to do a rights issue? What are the figures? What is the price that we're looking at? And also, in terms of this, Kenya is actually promoting itself by actually issuing and saying that they're actually looking at revenue growth. One thing we know that with the weakening of the shilling, they're actually going to post more in terms of revenues this year. But yet again, we're actually looking at the cost element of it, because the fuel cost is actually the highest cost for them, and they do it in dollars. So that vis-a-vis the revenues that are getting in, so that is the tricky situation for them. But in terms of performance, in terms of appetite coming in, we may see now people coming in to ask about KQ, and in terms of what price do you think the rights issue will be at? Especially since that stock is down 40% for 2011. Thanks very much for your time today, Amos.